Welcome to Boiling Point, the podcast to motivate ever-evolving entrepreneurs and forward-thinking movement pioneers. Our hosts, filmmaker Greg Hemmings and executive coach Dave Vale, are turning up the heat in the world's business communities. Our interviews with entrepreneurs, thought leaders, and movement makers are raising the temperature of inspiration. Live from the hottest studio in this quadrant of the universe, here are Dave and Greg.
Hey, welcome back to the Boiling Point, everybody. And Dave, as always, so good to see your smiling face. How are things upriver?
Good. The sun is shining, and we were just having a conversation about haze and the smoke coming in from wildfires, and there was a interesting, like almost like a Japanese kind of style sun, red sun.
Did you see it last night? It was wild.
Yeah, it was pretty. And the night before. It's hard to believe this far out east that we're.
Yeah, so like we're on the east coast of Canada, and we are getting smoke from not only Ontario but also British Columbia, and it's just incredible how it's just a reminder of how connected we are. You know, wind currents way up in the air, and you know they float over, so does smoke. And I guess the nice part of that, it's been producing some really nice sunsets. But that's probably the only nice thing about it. And our good friend Lars is here as our guest today, and he's also experiencing a beautiful day in Toronto, coming out of a couple of days of awful smoke haze as well. So Lars, welcome to the Boiling Point, my friend.
Thanks very much for having me, Greg and Dave. Pleased to be here.
And for those who are tuning in by listening on wherever you listen to your podcasts, Lars is actually on a lake right now with really beautiful leaves that are turning fall. And it kind of gives me that little bit of anxious feeling that maybe summer is coming to a close.
just a virtual background, so don't fret too much. Don't fret too much.
So Dave, Lars and I go back a little ways. Vancity is another rockstar B Corp company that started as a community bank, essentially. And correct me if I'm wrong, Lars, but now it's jumped heavily into investment banking and really funding projects around climate change, sustainability, technology that is really at the next level of taking our world into a sustainable future. But so I don't completely destroy the description of what you're doing, Lars. Why don't you introduce yourself to the Boiling Point community?
Yeah, no, happy to. So I have the privilege to work with Vancity Community Investment Bank, VCIB for short, since the name is a mouthful. We're really a national arm of Vancity Credit Union. VCIB is a Schedule I bank, so same kind of legal charter as the Big Five or what have you, but with a really unique mandate as Canada's first dedicated impact bank to exclusively finance clear opportunities of social environmental benefit. We do that in a few major sectors, but we're privileged to do that work on the back of the history of our parent company, Vancity Credit Union, Vancouver-based and kind of headquartered entity that has actually been a really long-standing kind of credit union and community lender. It's actually the largest English credit union in the country, so just behind Desjardins.
Wow. Hey, you know what? Just like I think it fits but I have this. I remember living in Vancouver, and a friend was actually, I guess, kind of a friend of a friend. Anyway, she was describing applying for a job. I don't know. It was probably an entry-level job, like at Vancity, and getting this wonderful rejection letter. But it was basically saying, you didn't make it, but keep going. It was this really, and it stuck in my brain as like, what awesome branding. But it says, I think it speaks to the core values. Because she walked away disappointed not getting the role, but she had this really good experience through the process and spoke very highly of the organization. And I just thought, what? Not everyone's doing that. So anyways, maybe that's a normal, typical story, but that's just something that first came to mind. This happened like this 20 years ago, probably.
Well, glad that there's some of that positive history. Definitely, the institution has been on a long trajectory. It's been in its 75th year. but particularly the last, say, 20 years or so, has really been trying to see more and more of its members' resources and just the way it operates in community, kind of showing up for progressive community development and environmental sustainability in meaningful ways. And definitely VCIB in our work is certainly an extension of that in trying to act with similar values in a kind of a commercial lending context.
And what sort of companies are you typically working with, partnering with, and investing into? Because it obviously there's a trajectory with VCIB, but just for our listeners' sake, what type of companies are you guys looking for?
Yeah, so I mean, we operate as a commercial lender. What that means is we just don't have a retail franchise outside British Columbia, and practically we're really active in a few kind of main sectors. So we do a lot of work in what we call as this kind of umbrella of social purpose real estate. So everything from affordable housing and co-ops and green buildings, not-for-profit shared spaces, you name it, but any use of kind of real assets that's driving positive change. More recently, I've really built out this practice in clean energy and sustainable infrastructure. And in those cases, we're working with project developers under a really fantastic range of technologies, everything from solar on one end to just recently, and apologies to listeners as I always get this a little bit garbled, but we recently financed the world's largest wastewater heat recovery project with a local hospital here in Ontario. And then more recently, I've been doing really business lending for mission-driven organizations. So we're actually pretty structure agnostic. We work with everyone from B Corps and co-ops and nonprofits and charities to just for-profit companies that hold their mission as a kind of a core part of what they do. And in that case, we're really often providing like working capital. So not straight up to startups. So usually these are companies a little bit later on in their journey, but definitely with a bit more flexibility and kind of appetite to understand people's business model than you'd often see from a conventional bank.
Would you say that the areas where you guys are focused, like it's probably such a niche in the global context of investment banking and whatnot, but I think about the big five, you say, and they must be looking at watching you guys like a hawk in a way, because like, do you think the others are paying attention to what you guys are seeding into? Or do you truly have this niche that you guys could potentially own in the whole country?
Well, I'd like to think we could own it. I mean, certainly, I think we're on a pathway to wanting to be, the home bank of choice for mission-driven organizations, I would say. But practically, yeah. I mean, and I mean this in a really positive way. I definitely think, at a minimum, within the financial sector today, what you see is that everyone is starting to at least talk a similar talk, if not all actually kind of walking that talk yet. And so certainly on issues like climate, good example where you see like literally the last 2 years, all of a sudden the same institutions, which unfortunately still are kind of financing pretty carbon intensive infrastructure and a big part of what they do still, are all very much talking about either net zero by 2050 kind of lending commitments or really significant numbers, like hundreds of $billion commitments to financing they often put it under a pretty vague umbrella like sustainable finance. And so, I think what's interesting is the question of how does that kind of translate down to ground, right? How do you get from that like kind of C-suite level, kind of visionary declaration down to the level of saying, okay, who gets money, who doesn't, right? And why? Because ultimately that actually has a huge ramification on kind of just shaping the economy we're going to have, whether or not that's the broader innovation economy and entrepreneurial ecosystem, or even the capital intensive stuff around buildings and infrastructure and whether or not we kind of have that kind of lock-in of existing infrastructure.
How do you guys how does a company or an organization qualify? Like, is there, I mean, they might have, they may be able to show, here's how we're doing financially, but does it help to be a B Corp as an example? What is criteria you might be looking for that would be different than a traditional lender?
Yeah, That's a great question, Dave. I mean, and it's interesting. I mean, I had the kind of privilege over the last year or so of co-chairing our internal, we call our impact management working group, and it really is kind of trying to address those questions, right? There's some ways where, at least when it's been when it's been easier to do, I think there are some ways where we are doing the right things in trying to put our money where our mouth is in trying to reward organizations for kind of holding those same values. So like concretely, and it's a small example, but a real one, we launched a whole suite of corporate credit cards. And when we did that, we said, okay, if you're a B Corp, we're never going to charge you an annual fee for your credit card, just like full stop. No annual fees on credit cards, right? Like those kind of simple things to do. At the same time, more importantly, we really do actually try to look through this lens of like impact due diligence. So trying to say, okay, we're doing financial due diligence, we're regulated to do so, we have to do so, but can we kind of take a similar lens that won't govern whether or not we'll lend to an organization, because that's still ultimately going to be a kind of a financial credit risk decision. But can we at least determine whether an organization will qualify otherwise? And so just concretely, there's a somewhat different criteria across those lines of business I mentioned, but on the business lending piece, we really kind of try to boil the ocean down to some pretty simple parameters, which is to say, okay, if an organization is driving positive social environmental change, it's coming from one of a few sources. Either it's embedded integrally in the product or service they deliver, right? It's just something about that product or service that is actually driving that impact, so that every sale, is kind of a net benefit for the world. It's something to do with the way they're operating. So they might just, I've got a coffee mug, right? Like it might just be, we just make coffee mugs, but hey, we found ways to either be incredibly operationally efficient, or and that could be environmentally or socially. So like the way we operate ourselves is really exemplary, and often that is more in that kind of B Corp space, right? Where you see it's about the policy infrastructure and the way they're trying to behave. So it could be a living wage employer as an example. Or it has to do with the ownership. And it's saying, okay, if an organization is gangbusters successful, excellent, right? And they're generating significant profits and returns, where does that accrue to? Who is that helping? And so, is that, you could ask the question of, is that helping more marginalized communities or communities that have, historically been more economically disenfranchised? Or is it going to more of the same? And so for us, you could have actually a pretty conventional business, but if they happen to be, let's say, a BIPOC entrepreneur, or maybe they're an indigenous community, that's of a difference too, and that's the way we see impact manifesting. So you don't have to be a unicorn and do all of those things, but if you're doing one of those things or some combination within those, right, then that's certainly a really good fit for us.
Where do you think the spirit of that ethos comes from, Lars? The credit union movement across the world really is by nature community based and caring about things that other financial institutions might not be focused on. But it's Vancity seems special. Like there's something else going on. And is that from the founding boards, or like how did the story happen that you guys are doing what you're doing right now?
Yeah, that's a great question. And I mean, I know that there's a book in there somewhere that either has been written and I haven't read it yet, or will be, but not by me. But in any case, yeah, I mean, I think Vancity's been on a really interesting trajectory, and I think you're right that definitely that community development ethos is a huge part of many credit unions and many credit unions' history in particular. We're privileged to be a member of this network globally called the Global Alliance for Banking on Values, and it's really interesting because it's groups out of Latin America, Africa, Europe. It's truly a global network. And what's fascinating in that is not all of them are credit unions. A good proportion are, but some of them are actually also just private banks. But you do see this kind of consistency of folks that have really kind of sought to maintain some accountability to a specific group of stakeholders or community. And so I think for Vancity's part, it's been interesting because on one hand, they grew as a credit union pretty substantially, as I mentioned, but didn't actually really grow a lot really through significant mergers and acquisitions. So they kind of stayed pretty like geographically based to Lower Mainland, Vancouver Island. So it's kind of a fairly specific area, and I do think that's been a big influence. I actually think that kind of through that, it's led to this greater sense of democratic control and kind of accountability to that membership. That's meant that there's this pathway, and I'm not gonna pick on anyone. I'm not gonna call anyone out, but definitely you do see this under the competitive forces of the market. You do see a lot of credit unions that kind of feel like they have to either get big or get out. And in that process of getting big, they start to look and feel like banks that kind of happen to be member owned. It's in the background, it's not in the foreground. And I think it's rare when you actually see a group that says, no, actually, this is like community development is why we existed. Most credit unions' history, they all were founded because there was some community that was economically disenfranchised, that was being cut out of either getting a mortgage or getting a loan, and they self-organized and they got around the kitchen table and they solved them. That's definitely the Vancity story of kitchen table to boardroom table over 75 years. But I think fundamentally trying to hold on to that root has been a really important part. And also at the end of the day, leadership matters, right? If you don't have that C-suite buy-in and mentality and consistency, and I think as a result, our board's willingness to say that's actually something we're going to recruit for. They're not. You could be an incredible CEO, but if you don't actually care about that Vancity DNA, then you're never going to get that job, right? And I think that's an important part of holding true to that.
And I also think just by nature of being a certified B Corp, that protects the leadership discussion. So let's say you ended up getting a board that wasn't totally as in line with the current values. Well, that's one of the actual functional benefits of being B Corp certified for organizations like this, where different ownership groups and leadership groups can kind of ebb and flow. The mission of the company just stays as is, and I always admired Ben and Jerry's story before they sold to Unilever. They, if I remember correctly, they weren't a B Corp, but when they started figuring out that they were going to sell, they became a B Corp for that very reason, knowing that the values of that company that they worked so hard on building would remain after an acquisition. So I think that's really interesting too, and also to see the banking world jumping into this space is, and you guys have been doing it forever, but like it's a growing movement. It's certainly in the B Corp space. We're seeing more and more credit unions and
100%.
And even other smaller banks going that road. So that's awesome. One of the questions I think we touched on earlier, but like smaller companies like across this country, not startups, but you even look at our company, Hemmings House and Vision Coaching for Dave. Is there opportunities there for day-to-day? And I know there is, because you and I have already talked about it, but let's talk to that sort of smaller company potential and what some of the benefits are of considering working with you instead of just going into the bank that they're currently using.
Well, thanks, Gary. I mean, don't feel like you have to softball me the ability to sales pitch or anything. I won't.
Well, that's what we're here for.
I won't try to make that too salesy, but I think that on our end, really what we've been trying to say is, are there ways that we can build a really kind of like partnered relationship that is going to provide organizations a bit of that platform for growth? We're by mandate and just by being a federally regulated bank, we're never going to be able to be the kind of like risk capital provider. We're not going to be able to be like an equity investor or even necessarily like a BDC, but we do have this ability to definitely flex outside of the conventional balance of what, say, an RBC would require. And part of that is actually just getting really comfortable with the difference between kind of perceived and real risks, right? There's often a pretty big gap between, on the face of it, what you kind of perceive as a smaller company, and then really understanding the dynamics of their business. So that's one, key piece, is just actually spending the time. And I think we're willing and able to do that in part because of that ownership structure. Like we definitely absolutely need to be viable and profitable as an organization to be sustainable. But our whole ownership structure is ultimately owned by credit union members out west, and that means that I think we have a bit more ability to spend the time and kind of staff cost that implies to be able to work with a wide variety of organizations. There are some interesting things that we've recently implemented given our mandate as well. Like we've recently approved a growth lending allocation as an example that specifically is targeting organizations that have strong IP, reasonable market traction, but are still at that point when actually maybe they're in between a Series A round and a Series B round, or those kind of things in a more of a venture landscape where they're not going to get conventional bank debt, but it's really expensive for them to just keep raising equity, and where we can potentially be providing a solution. So tangibly, we're a digital first bank, and we engage with organizations already a bit across the country, and are trying to do so more. But practically, it's knowing that you have this values-based financial institution partner that's willing to spend the time because we care about the mission in a way that is beyond just lip service, right? And we're actually really trying to find ways to help clients succeed.
You're clearly passionate about what you do, Lars, and you spoke about recruiting earlier. I'm kind of curious about your personal story. How'd you end up at Vancity, and like what was that process like? Because it sounds like you found your a way you can really express your values, your personal values, is my guess. I could be wrong. In a way that you don't typically hear from, kind of someone in your space.
Yeah, good question. Well, I mean, it might surprise you, but I'm really red in tooth and claw. No, I'm just kidding. But no, I don't come to this work from a traditional banking background, but certainly feel privileged to be able to, show up at an institution like Vancity every day. My history is actually more in the Canadian kind of social finance and impact investing space, where often in more kind of private market settings, organizations and institutions have been trying to find ways to invest and deploy capital where alongside a financial return you really are seeing those tangible social environmental benefits. And it's part of why I was interested in joining with the bank, was to help build out some of that institutional capacity for this space going forward. I'd had the privilege and prior roles to do a lot of kind of consulting and advisory work with asset owners. Often they were like things like philanthropic endowments, some family offices, where they were making these private investments and were doing so, but often with things like, so it was a private equity fund, or maybe it was a direct loan or things like that, which was powerful and impactful. But what it demonstrated, what it illustrated for me, was that there really wasn't a lot of mainstream institutional capacity in Canada to be able to do that, particularly at scale. So it was clear how you'd accomplish a single transaction in a given community, but then when you start saying, okay, well, things like climate or things like the affordability crisis or other things, like these are macro challenges where you actually need systemic infrastructure to move lots of funding at scale if we're going to make a real dent. Then you do actually need institutions like banks involved. So that was definitely a big part of what motivated me. But I had an interesting story. My background is actually in climate activism way back when, and doing kind of climate policy work. Briefly got a little bit disillusioned with that, to be honest, and started trying to say, but did give me exposure of how capital markets really shape the kind of economies that get built out. And so turned my attention a bit more domestically, started getting engaged more in the responsible investment space before then really getting kind of fully engaged on the impact investing community, and have been able to spend my career so far really deeply enmeshed in that space.
That doesn't, it doesn't surprise me. Just in the short time we've been talking, I was like thinking this is not your traditional kind of banker. So to hear that background is helpful. Was there any blowback from your, if you go back to your climate activist days when you came into this space, and because it might not be fully understood what you're doing, and it might on the surface sound like, I don't know. I mean, there's no zero judgment. I think what you're doing is awesome, but you see, like Greg, remember doing some films, and you got some blowback from people on environmental issues, and didn't you, Greg? I mean, or something. I can't remember.
We got hired to do some films on something that looked like we were pro industry that wanted to exploit the lands. It was misinterpreted. However, again, like I said, misinterpreted. I'm curious about that too.
And I'm sorry to bring that up, but I just remember that you really, that was a challenging time for you, because it was people weren't fully informed, and there was my sense of it was there's some arrows being slung. You didn't say that, but that was just my sense of it. I just wonder, Lars, if you run across anything like that, because when we're trying to do good things, often people don't recognize it that way for whatever reason, and we have to kind of push through that. I don't know if you've had any of that experience.
Yeah, I think so. Certainly, one thing I have experienced, and I don't actually think it's unfair either, is I do think there does need to be a really healthy skepticism of the kind of the limits of what can be accomplished kind of purely through financial means and financial instruments, and that as a tool to support or drive change. At the end of the day, like I as an example, just concretely, like I get impact investing in particular is a very kind of like hot topic right now, particularly in a lot of business schools and things like that. And so I get approached very regularly by either current or upcoming graduates saying, how did you get started, and how do you advise someone to get involved in this space? And it's funny because I'm, my partner keeps commenting, I'm starting to go gray, but I haven't yet, so I'm not that aged into it. And practically, I often tell them, look, for every like one person that works in impact investing or social finance, like you need, pick a multiple, but maybe it's 20 people, maybe it's 40 people, like actively doing the work. Because if I'm at my most humble, I would say, banking and finance, we're glorified plumbing. We're trying to direct capital flows to productive places and do so in a risk managed way. But other than that, like most of the actual leadership, the actual kind of incremental, instrumental driving of change is really at that like entrepreneurial venture level, at that business leader level, much more so than just the resource supply that comes on the finance side. And practically you can't push on a string. Just handing someone resources to do something won't change things if there isn't that will to do so. And so I think one thing I've often advised is I wish a lot of that kind of passionate interest in impact investing was actually more redirected to things like social entrepreneurship, and saying, hey, we actually have a problem actually in our whole economy around the financialization of the economy. Way too much of the economy is people trading paper and making money, as opposed to that real economy of what it actually looks like on a main street. And so I will say, particularly from having come from more of that background and thankfully still having the privilege to engage with really progressive communities, I would say there definitely sometimes is this kind of this pushback and skepticism, which I don't think is totally unfair. That just needs to be kind of tempered with a realism around some of the limits of this work. And practically, I would say there's an interface with a lot of our work, and even as an example, the work of the government, which definitely lately, at least on some themes like climate, has been driving really significant change. So concrete examples, like there's lots of clean energy transactions that we finance that just they wouldn't exist, they wouldn't be viable if you didn't have a government that said, these are the rules of the game that they're now creating around things like carbon taxations or clean fuel standards or things like that. So there's still this fundamental policy role in terms of shaping the rules of markets such that they directionally are pointing towards goals that we can all share around sustainability and inequality, as an example. And yeah, you're not going to solve that with actors in the market or progressive bankers or things like that.
Well, and just that realization of, I mean, the complexity surrounding it, right? Where you need good policy and you need,
100%.
institutions that are going to support it, leadership, you need the knowledge of whatever that impact's going to be. I mean, it as you describe it, there's you start to recognize there's a lot of complexity there.
Yeah, no, absolutely. And yes, it's for that reason, I'd say I've definitely heard criticisms, and I don't disagree entirely with all of them. And it's just it's one of those classic moderation questions where it's like you kind of need a bit of everything in balance, because definitely we won't solve these issues just through more impact investing. We're going to need lots and lots of talent and initiative across that whole value chain.
That's awesome. Lars, thank you so much for sharing, man. It's inspiring. It's certainly the most inspiring banking interview we've had, Dave, eh?
I think so.
Well, I should be careful saying that because we've had our friends from BDC on here as well. Listen, any B Corp bank that we've talked to.
Well, and we've had impact investing, kind of managers come on, and I'm always fascinated because to be honest, I need to know a lot more about some of these financial levers, and I'm always impressed by hearing people that don't have just that experience like you, Lars. So that's to bring that together is really very cool. How do people get in touch with you if they have questions or they want to be a customer, for example?
For sure. Well, definitely feel free to visit our website, which continues to get better and better, which is just VCIB.ca. It's the initials of the company, Vancity Community Investment Bank .ca. And then similarly, feel free as well. I'm always personally, I'm happy to connect with folks via LinkedIn if people want to reach out and find me there at Lars Boggild.
Awesome. Lars, thank you so much, my friend, and enjoy the rest of that beautiful autumn day that you are lakeside. And
Lars, I would point out that you noticed that Greg didn't say your last name once after asking you how to.
Yeah. Lars Boggild.
Oh, there
everybody. Boggild on LinkedIn, and make sure you make a connection. And Lars, if you do make your way back to New Brunswick for a visit, make sure you come down to St. John's and hang out with Dave and I for a bit.
Will do. Thanks very much, Greg, and pleasure to meet you, Dave.
Yeah, awesome. Nice to meet you, Lars. Take care.
Cheers. Take care, guys.
Thanks for checking out this episode of Boiling Point. Remember to rate and subscribe to us on iTunes and follow us on Twitter at Boiling Point Pod. To see more from Dave Vale, check out leadershipunleashed.ca or visioncoachinginc.com, and on Twitter at Dave_Vale. And to catch up with Greg, visit hemmingshouse.com and at Greg Hemmings on Twitter. Thanks for listening, and remember, keep that pot boiling.